Hello everybody, welcome to today's Fundamentals. Hello Peter.
Hello.
So what's new in the markets?
Well, we had an edging lower of the US dollar, which was, okay, as we have mentioned yesterday, we expected that the markets would be calming down about the missile incident in Poland. They actually did. And that was one factor which tended to drive safe haven outflows for the US dollar. At the same time, a bit later, we had also some comments made by Fed Board Governor Waller, where he stated that he would be feeling comfortable with smaller rate hikes. Yet we have to note here that the Fed Board Governor also stated that we should watch out for the actual terminal level of the interest rate, implying that there may be more rate hikes to come and that the terminal rate level would be probably a little bit higher. Finally, I would be also noting the retail sales growth rate of the US, which accelerated more than expected and reached, if I'm correct, 1.3% month on month. And on the one hand, that tended to imply that there is a healthy appetite on the demand side of the US economy. On the other hand, though, it may imply also that consumption is going to continue feeding inflation in the US economy.
And how about the US stock market?
Well, US stock markets were down. Maybe there was an exception with Dow Jones, which traded a little bit mixed. I would be noting that the main event besides the retail sales we have mentioned already was Target. Target's earnings report tended to disappoint for quarter three, especially the EPS figure, which was lower than expected. I would note though that maybe the main element of Target was the warning about quarter four and the possibility of lower sales, which more or less tended to shake the markets, as that would imply for retailers that they're heading into a period which usually is the most critical period of the year, given the holiday season, Black Friday, etc., etc. And Target is expecting a slowdown, which definitely is not good news for US retailers mainly, but in general the market as well. Last but not least, today I would be noting the release of Alibaba's earnings reports for quarter three, which could create some turbulence in the markets as well. Definitely will be hitting headlines.
And what's on the calendar for today?
Well, we have a number of financial releases. I would be making a start with the construction data, the building permits and the housing starts for October from the US. Both figures are expected to drop. And that could be implying practically that the tightening of the Fed's monetary policy has an adverse effect on the construction sector of the US. That would be one. The second I would be noting would be the initial jobless claims figure. It's expected to remain unchanged at 225K. Could weaken the US dollar a little bit. And then we have the Philly Fed Business Index, which is expected to improve, but it's expected also to remain in the negatives. So theoretically, it could provide some support for the US dollar, but given that it remains in the negatives, we may see the market's reaction being a little bit muted here. Other than that, I would also be noting during tomorrow's Asian session, the release of Japan's CPI rates, there for October. An acceleration is expected for the core rate. Should that actually occur and probably be followed also by an acceleration of the headline rate, we may see practically the pressures increasing on BOJ for an exit strategy from its ultra-loose monetary policy. Mind you, that during today's Asian session, we had a statement by BOJ Governor Kuroda, where practically the governor reaffirmed that the bank is going to maintain its ultra-loose monetary policy and the dovish stance in order to support the fragile Japanese economy. And it was characteristic, let me remind you, that the GDP rate of Japan slowed down beyond expectations for Q3. So that would be as for financial releases side. On the fundamental side, we would be highlighting, especially for pound traders, the autumn statement, which is to be made by UK Finance Minister Jeremy Hunt. It should be around lunchtime. And at the statements, it's expected that Jeremy Hunt will be announcing tax hikes, and at the same time probably will be announcing that it will be cutting spending, public spending. Both elements, regardless of the proportion in the mix, are expected to practically weigh on the UK economic outlook and could also weigh on the pound. On the other hand, though, we have to note here that the message was already well transmitted to the markets. So it's something which is widely expected. And exactly should Hunt not provide any surprises and stick to the script, we may see the market's reaction being less volatile than expected. But overall, it's a big issue. The UK economy is at a crossroad, and the autumn statement would be signaling on multiple levels a change of policy. On the one hand, we have definitely a change of policy regarding Kwarteng's and Liz Truss, the former government, which, let's put it this way, had a different vision for the economy. And we're returning more to an orthodox economic policy, conservative one, but still orthodox. And on the other hand, that could also have an effect on the monetary policy of BOE. Because BOE was keen on hiking rates, and with a fiscal tightening, we may see inflationary pressures in the UK economy easing, and that would make BOE's work more easy. Mind you that yesterday we had the release of the CPI rates from the UK. They were for October, and the headline rate on a year-on-year level accelerated more than expected, reaching 11.1%. And for the time being, that increased the pressure on BOE. That should be it.
And how about the monetary front?
You're right, we forgot about that. On the monetary front, we have a number of speakers. I would be noting Hugh Pill from BOE, the chief strategist. Would be interesting to hear. I would expect also Bostic, and I would be highlighting Bostic for an additional reason, because Bostic in an essay recently had stated that he doesn't see that the tightening of the Fed's monetary policy actually curbs inflationary pressures in the US economy. So we may see him practically reiterating that, maybe probably even emphasizing it. And that could be tilting a little bit to the hawkish side and could provide some support for the US dollar. Other than that, I would be also noting BOE MPC policymaker Tenreiro. And I would be also noting Cleveland Fed President Mester, a well-known hawk, as well as Minneapolis Fed President Neil Kashkari. He could be also making some hawkish comments, which could provide some support for the USD.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
Welcome to the technical analysis part of the presentation. My name is Peter Yosef. I'm the senior analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. Mind you that all charts to be presented are to be of the same time frame, unless otherwise stated. With no time to waste, let's make a small comment. Now, the US dollar index, in contrast to yesterday's expectations that we could see some bearish tendencies, it didn't. The stabilization of the US dollar index tended to solidify. And despite some slight drops, managed to surface above the 106.10. It's characteristic how also the RSI indicator is on the rise, aiming for a reading of 50, which may be implying that the bearish sentiment is slowly but steadily fading away. Now let's make necessary corrections. Definitely the R1 has to be corrected and its role is switching to a support line, given that the price action has broken above it. Let's go hunting for a new resistance line. I would be choosing this one. I'm drilling into the 1-hour chart for more detail. Here we are. And that would be back to the 4-hour chart. In red, please. The 110.90. Excuse me. Okay, let's correct the labels. Starting with the S3, which is now being placed at 103.20. Moving on to the S2 at 104.50. S1 at 106.10. R1 at 107.45. R2 at 109.10. And finally, the R3 at 110.90. Plugging this in. For the time being, we tend to maintain a bias for the sideways movement to continue, with the price action probably revolving or continuing to revolve around the 106.10, maybe even a little bit higher, and validify the importance of the S1 as a support line. Should the bulls take over, which for the time being does not seem to be so probable, I would expect the price action to rise, break the 107.45, and start aiming for 109.10. On the flip side, should the bears take over, we may see the price action dropping, breaking the 106.10, and start aiming for 104.50. Note how the Bollinger Bands, the upper and the lower one, have converged, which tends to underscore practically how volatility has been reduced for the US dollar index. On the other hand, let's never forget that we had the 100 moving average dropping below the 200 moving average. Once again, signaling that there are some bearish tendencies. At this point, it would be interesting to note that the boys at the research desk had told us that, note this is a downward trend line in their opinion. I wouldn't be so keen on it. for the time being, it still seems to allow the index to stabilize further. Okay, let's also delete all these. But before we leave the US dollar index, I would like to have a look at the daily chart. We can see that there is a steep downward trend line. Something like this. Let's have a look at it at the 4-hour chart. It's the same thing. A little bit steeper. And that tends to underscore the bearish tendencies for the index, but for the time being, once again, we tend to maintain a bias for sideways movement. It would be interesting to see whether the price action will be actually reaching or even breaching the downward trend line, which would be signaling practically a change of trend. And that's a big question for now. For the time being, sideways motion expected to be maintained, revolving around the 106.10 support line, maybe even a little bit higher. Let's have a look at Euro USD. Euro USD, which, let me readjust it. Now, Euro USD, in my opinion, is still in sideways motion, albeit we have to note that the pair is continuously testing the 1.0360. It's very, very interesting, and I think we have a better look at it if we look in the 1-hour chart. Note the multiple touches to the upside. 1, 2, 3, and then to the downside. 1 here. Let me delete this, get more clear. 1 here, 2, 3, 4. It's actually testing it right now. And I would be also noting that the RSI indicator is still above the reading of 50, but it's falling. And that may imply that the bulls are about to leave the scene. Maybe even the bears are allowed to enter. If we drill back to the 1-hour chart once again, you can see that the price action of RSI has dropped below the reading of 50 already, implying that there is, in the more short term, a more bearish sentiment on behalf of the market. Back to the 4-hour chart. Now, should the bears actually take charge, we may see the price action breaking the 1.30360 and start aiming for the 1.0220. And for a bearish outlook, definitely the premention would be prerequisite. On the flip side, should the pair decide to remain stable and above the 1.0360, maintaining a very tight range-bound movement, that may allow it to remain in the spectrum between the 1.0360 and the 1.0485. A bullish outlook could occur, in which case we may see the price action rising, breaking the 1.0485 and start aiming for the 1.0605. Let's magnify this. And it's a nice upward trend line which has been broken. It's irrelevant right now anyway. Once again, sideways movement expected. And for bearish outlook, we would require clear breaking for the 1.0360 as one, and the price action to start actually aiming, even testing the 1.0220. Let's move now to cable. Cable which maintained a sideways motion. It's very clear between the 1.1830 and the 1.2020. The upward trend line we have drawn is about to be broken. The sideways motion, this is about to break it. So we tend to maintain our bias for sideways motion, given also that the RSI indicator is slowly dropping towards the reading of 50, still above it, but dropping. And In such a case, I wouldn't be surprised to see the price action remaining close but above, or maybe even revolve around the 1.1830 support line. I think that's the main reference point for the pound right now. In case we have a bearish outlook, I would expect the price action to break the 1.1830 and start aiming for the 1.1640. A bullish outlook, should the pair be unable to clearly break the prevention upward trend line, would practically force the pair higher. Definitely the next peak, I want the next peak to be higher than this one. And for that to happen, it would mean that cable has to break above the 1.2020 and start aiming for the 1.2275. Once again, a sideways motion is expected for now. A bearish outlook could also occur should we see a clear breaking of the upward trend line, the 1.1830, and the price action start aiming for the 1.1640. Let's have a look at USDJPY, another sideways motion. Here we are. A very tight range bound motion by USDJPY. And we note that there's still some bearish tendencies, but they're slowly fading away given that the RSI index is slowly rising, nearing the reading of 50. For the time being, we tend to maintain our bias for a sideways motion between the 140.70 resistance line and the 138.45 support line to be maintained. So we could see the price action remaining at this level. It could even widen a little bit, but overall it's expected to remain within this spectrum. Now, also evident of the low volatility is once again the converging of the upper and lower Bollinger Bands. Now, should the bulls take over, we may see the price action rising, breaking the 140.70 and start aiming for the 142.40. On the other hand, should the price action start falling and we have a bearish outlook, for a bearish outlook, a prerequisite would be definitely the breaking of the low boundary of the current sideways motion, that would be the 138.45, and the price action to start aiming for the 136.15. At this point, I see that you have been writing about the moving averages. Yes, the cross here is between the 100, which crossed lower than the 200, and that would be an indication of a bearish sign, but that was already the bearish movement which caused the 100 moving average to drop below the 200 moving average. And never forget that moving averages are followers, not leaders, and they follow the price action. It would be an interesting element here would be to switch the 100 to 50, which would bring it closer to the price action, and the 200 to the 100, also bring it lower. Now we can see practically how the price action is still in downward motion but starts to stabilize, and that would be more evident at the 20 moving average, which is practically engulfing the price action. Okay. Let's have a look at the other safe haven currency pair, that would be USD-CHF. Becomes even more clear here. Let's switch them to 1500. The pair follows a nice sideways motion between the 0.9495 and the 0.9385. It's characteristic how the RSI indicator has risen, has approached the reading of 50. It's actually right now at 45.3, which is pretty close to the reading of 50, implying a rather indecisive market in my opinion. But there's still room for them to advance higher, something which is also reflected in the movement of the past 24 hours, which is slightly upwards. Nevertheless, the drop of the Bollinger Band, the upper Bollinger Band, and the rise of the lower Bollinger Band, the convergence, once again underscores the lack of volatility for the pair. We tend to maintain our bias for a sideways motion to be maintained between the 0.9495 and the 0.9395. Given though that there are continuous upward movement in the past 24 hours, and that would be more evident in the 1 hour chart, allow me to drill into the 1 hour chart. Here it is. You can see that we had a true, peak, a peak, a peak. It's still not conclusive. And in my opinion, on the flip side, it does underscore the sideways motion. Back to the 4 hour chart. Should the sideways motion be maintained, we may see the price action, as mentioned, remaining between the 0.9495 resistance line and the 0.9395 support line. We're talking about a distance of around 100 pips. For a bullish outlook, we would require a clear breaking of the R1, the upper bound of the current sideways motion, and the price action to start aiming for 0.9625. On the flip side, should the bears take over, we would expect the price action to drop. Definitely, we would require to break the 0.9395 and start aiming for 0.9285. Let's move to commodity currency AUD/USD, currency pair AUD/USD. Okay. Now we have two elements here and a number of changes. Definitely, this level has to be pushed up and be turned into a resistance line. And that would be the 0.6795 resistance level. It's going to be deleted. Now the 0.6915 becomes our second resistance line. And at this point, I would like to have a look at the validity of the resistance levels. That's valid. This was valid from before, and this is valid as well. This is as well valid. But for the time being, I think it's a little bit overshot. Let's readjust. Yep. Let's go hunting for a new resistance line. This is an interesting level as it has one touch here, the second touch here. But this is interesting as well. Note how it has a touch to the downside, also a touch to the upside, also made some commotion here and here. Could be valid. A little bit lower. I'm keeping this as it is a starting point and has been validated again. And that would be the 0.6385 in green support line. Let's make the necessary corrections. Final resistance line being placed at 0.70. Second resistance line being placed at 0.69. 15. First resistance line being placed at 0.6795. First support line to be placed at 0.6660. Second support line being placed at 0.6545. And final support line being placed at 0.6385. At this point, I would like to have a look what the market reaction was at the time of the release of the Australian employment data during today's Asian session. I'm drilling into the 1 minute chart right now. Let's widen this. Let's have a look at what exactly the release was. Going to investing. It's a classic calendar. And this day, GMT plus 3 is the time here. GMT plus 2, sorry. That was yesterday. Today was at 2:30. And you can see how the data was better than expected. The employment change figure rose beyond expectations. And the unemployment rate dropped instead of rising as was expected. So overall, they were better than expected at 2:30. But you can see that this 727 at 2:30 we had a small jump. How many peeps? 12 peeps only. So we have a bearish sentiment which was not affected by the better than expected release. Interesting. AUD USD falling, weakening continuously. So we may see the bearish tendencies being maintained. It's also interesting on technical level, the downward trend line, which is also supported by a drop of the RSI indicator, which has reached now the reading of 50. Yet should the downward motion be maintained and the bearish sentiment as well, we may see it breaking below the reading of 50, and that would also be pushing practically the price action of AUD USD below the 0.6660 support line. For a bearish outlook though, I would require clear breaking of the 0.6660 and start aiming for 0.6545. Should a stabilization occur, we may see the price action bouncing on the S1, breaking the downward trend line we have just drawn, and remaining in the spectrum between the 0.6795, which provided resistance twice in the past few days, while the 0.6660 provided support. That was exactly when? Let's have a look. The 14th of the month. Both levels seem to be pretty valid, especially given that the S1 provided resistance here, while support further back. So a stabilization of the pair would be also signaled by the breaking of the downward trend line and the price action remaining between the R1 and the S1. I'm talking about 135 pips distance here, pretty wide. A bullish outlook. For a bullish outlook, we would require a clear breaking of the downward trend line, definitely a breaking of the R1, I would like to see a higher peak than this one. And the price action to start aiming for 0.6915. Let's move now to the second commodity currency pair, that would be USD CAD. Note how the US dollar is strengthening also against the CAD as it is against the Aussie. Albeit it's not so evident here, and there is a relative stabilization. And I would like to have a look also at the market reaction at the time of the release of the US CPI rates yesterday, which were practically as expected. Normally there should be not much of a reaction here. Let's have a look. That was at 3:30 yesterday. 5. Here it was. Yep. USD CAD rose by 33 pips at the moment of the release. It's this candlestick here. Yet quickly relented any gains, but moved decisively higher later on. In an effort of USD strengthening against the CAD, stabilized. Drilling back out to the 4-hour chart, readjusting. Let's correct a little bit the positioning of the labels. Once again, we tend to maintain a bias for a sideways motion to be maintained between the 1.3385 and the 1.3230. The 1.3230 provided support here, while the 1.3385 provides support here, and is considered to be a resistance line given that the price action has broken below it. For a bullish outlook, which is a possible scenario, we may, or if you prefer, we would require a clear breaking of the R1. We need to see that the price action has been able to break above the upper boundary of its current sideways motion. And in that case, we may see USD CAD advancing further higher, aiming for the 1.3525. In case of a bearish scenario, we may see the price action dropping. Definitely would require clear breaking of the 1.3230, a lower true than this one, and start aiming for the 1.3095. The RSI indicator has risen, broken above the reading of 50 and stabilized close by. It's actually right now at 54. So yeah, there may be some slight bullish tendencies, but in my opinion, that's not conclusive yet. I would require more here. Third commodity currency pair, and that would be NZD-USD. NZD-USD, which is dropping like the Aussie. Note how also the RSI indicator is dropping, aiming for the reading of 50, has not broken it yet, but seems to be pretty close to it. Now for a bearish outlook, we would require clear breaking of the S1 0.6080 and the price action to move decisively lower, aiming for 0.5985. Anything else, and as long as the price action respects the S1 and the first resistance line, the 0.62, tends to imply sideways motion continuance. On the other hand, should the bulls take over, we may see the price action rising, breaking the R1, and start aiming for the R2 0.6315. Let's move now to the precious metal, gold. Now gold has corrected lower and has broken the 1765 support line. It's just below it. It's not a clear break yet, but quite possible one. For the time being, let's correct the support line and turn into resistance. I'm going to be using this resistance line. It's a level well noted, and I'm going to be using it as a support line given that the price action is above it. 1680, 81, sorry. Let's widen the chart. The R3 now is being placed at 1807. The R2 to be placed at 1785. The R1 at 1765. The S1 at 1735. The S2 being placed at 1706. Actually, this could be a little bit lower in my opinion. Could widen somewhere here. And that would be the 703, maybe 05. Let's have a look. Yeah. And final resistance support line being placed at 1681. Now, we have a number of elements here. Definitely the breaking of the upward trend line, which was guiding the pair since the 3rd of November, it's a big issue. It signals the termination of the upward movement of precious metals price. Now, the first alternative would be for stabilization of gold's price, but that does not seem to be the case. The price action of gold has retreated after hitting a ceiling at the 1785, and interestingly enough has retreated enough to break just below the 1765, and that allows us to form a downward trend line. If we drill down to the 1 hour chart, would become more evident. Like this. On the other hand, I would require to see that the price action in the 1 hour chart forms a lower trough than this one. And by the way, that would allow us to correct the S2, S1, sorry. $1,761 is them. In green. Okay, that forces us to make a readjustment once again. So practically what we're saying is that the possibility for sideways motion is not over unless the price action of gold actually forms a lower trough than this one here, this shadow here. Let's go hunting for a new R3 that changes our plans and shows us how useful it is to actually move between charts. I'm going to be keeping this peak here as the new resistance line at in red. 1840. Readjusting the chart. Now we have to recorrect the labels. The perspective has changed substantially with that movement. And we make a start with the S3 being placed now at 1705, the S2 being placed at 1735, the S1 at 1751, the R1 being placed at 1785, that remains the same, and the R2 at 1807. Sorry, and a little bit off chart would be the R3 at 1840. Now locking this in, it's the final correction. Once again, gold's price has broken the upward trend line and is on the downward movement, yet for a bearish outlook, I would require a breaking of the S1 1751 and the price action to start actively aiming for the 1735. We're talking here about 25 almost, sorry, 15, 14, no, $16 distance. It's not that wide. Could be covered from gold. Yet gold for the time being seems to be lacking the necessary volatility. But it is actually threatening the S1. Should the S1 hold its ground and turns the price action back up, that would be something like this one, and yet remains and respects the R1 1785, that would imply stabilization of gold's price action. On the flip side, a bullish outlook would occur. Once again, should the price action rise, break the just drawn downward trend line, break the R1 1785, and start aiming for 1807. Small correction here. Typo. On the other hand, note how the RSI indicator is dropping, aiming for the reading of 50, which may imply that there is not yet, but a bearish sentiment is building up. And if that's the case, we may see the price action being able to break the S1 and start aiming for the S2. Let's have a look at WTI price. WTI, which is in a downward motion, slowly but steadily. On the other hand, though, it's still not convincing. I would be readjusting the first support line, though, placing it somewhere here. 83.5. So I would require a clear breaking of the S1 before calling in the bears. Other than that, I tend to maintain a bias for sideways motion, given that the price action remains between the 86.80 and the 83.50. Once again, though, a bearish surprise is quite possible, given that we have a continuance of lower peaks. And it would be interesting to note the triangle, the downward triangle, which has started to form. While on the flip side, the 83.50 is holding its ground. And this shows us the consolidation of the price action. Should the triangle, the bearish triangle, actually play its role, we may see the price action breaking the 83.50 and start aiming for the 75. Before that, though, main tendency is to remain on sideways motion. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
Hi everyone, welcome to another IronFX live TV video. In this video, I'm going to talk about swap or rollover. So, what is a swap? Swap is the interest paid when the market rolls over. Every day the Forex market rolls over, which means your trade is carried from one day into the next. So basically a swap refers to the interest earned paid for keeping a position open overnight. If you're paid swap, the cash amount will be added to your balance. If you're charged swap, the amount will be deducted from your balance. Swap charges are usually small but can add up over time. There are two swap types, swap long for long positions and swap short for short positions. Both types are expressed in pips per lot and vary depending on the financial instrument that you're trading. One way of profiting from swap rates is the carry trade. This involves buying a currency with a high interest rate while selling a currency with a low interest rate. You will earn a profit on the net interest of the difference. If you close your positions before the end of the trading day, which is known as the rollover point, you will not owe any charges or earn any swap interest. The interest rates for different foreign currencies are based on decisions taken by the central banks. The amount credited or charged to the trader can also depend on a number of factors, such as the difference between the interest rate of currencies, the Forex broker's commission rates, the day when you open the position, or the price movements of the currencies. Thank you for watching.
Before we start webinar today, I hope everyone is ready to learn. Our topic for today is to know your charts. Okay, hold on, give me a moment. Okay, is to know your chart, which is the Heiken Aishi. So we're gonna be understanding the Heiken Aishi today. Before we start, I just want to remind you guys that today's webinar is only educational. It is for educational purposes. Anything I share in this webinar should not be construed as trading advice. Trading may not be suitable for everyone, so do be cautious, especially if you are new to the game. Okay, if you have questions throughout the webinar, you can ask. You don't have to be shy. The whole point of these webinars is to guide and assist you guys. Okay, cool. I'm going to move on. Okay, so I'm gonna introduce myself, a little bit about myself. My name is Cassandra, you can call me Cass. I am an investment analyst for the award-winning research firm Everett Fortune Group. I'm also a prop trader. So, I mean, that's a little bit about me in background. I work in the bank, I work with the airlines, I was an air hostess, I majored in law, majored in business. But I think more importantly, when it comes to trading, my experiences in trading is that one thing that I am quite proud of is that I have passed multiple prop trading tests. So these prop trading tests, I'm not sure if you guys have heard of it. Such companies are FTMO or MyForex Funds. So to pass these tests, you will require a trader would require to do 8 to 10% a month without touching the drawdown of 5% a day and 12% throughout the entire challenge. So I've passed those tests multiple times, and I've used that with identifying key levels of reversals through combinations of supply, demand, and Fibonacci confluence while using trend as my main decision maker. Okay, this is important because our topic for today, which is the Heiken has a lot to do with trend. Okay, so it's going to be very important in identifying entries. Okay, so our agenda today will be to understand what the Heiken Aishi is. I really don't know if I'm pronouncing it right because it is a Japanese word. The best bet I have is that it's called Heiken Aishi. Okay, I know how to use it, just don't know if I'm pronouncing the name right. How is it different from the normal candlesticks? Okay, how to use it in trading? How can we use this with different indicators? And finally, we will be crafting a strategy using the Heiken Aishi. Okay, any questions so far? Okay, cool. Okay, so what exactly is the Heiken Aishi? Can you guys let me know in the chat box if you guys have even heard of the Heiken Aishi before? Do you know what it is? Do you have any idea? No? Okay, never heard of it. Is the chat box disabled? Okay, hi Christine. I don't think it's disabled. I do see your message. But the funny thing is, I don't know if the others are able to answer me because I've been asking for the last 10 minutes since I started if everyone can hear me clearly, if you guys can see my screen. Usually, you guys are very active in answering like, yes, I can see your screen, I can hear you clearly, but today no one's answering. So I don't know if there is something wrong with the chat box. But the fact that I can see Christine's answer means that it should be okay. Okay, now I see Victor's answer. Okay, thank you. Brian. Okay, Brian was saying that he did answer, but I wasn't responding to his answer. So I'm guessing the chat box is not working well, but you guys are talking to me on the Q&A session. So with Zoom, there's two places that you can send in your question or you can talk to me. One is via the chat. Okay, so I'm guessing you guys were talking to me through the chat earlier on. That's why I wasn't seeing your response. And now I see Christine, Victor, and Brian answering me on the Q&A section. So if you guys have any question, just go straight to the Q&A box and ask in the Q&A box. Okay, thank you, Victor, for clarifying that you can hear me and you can see my screen. I was so worried the entire time. I wasn't sure because usually you guys would have answered me by now. Okay, so what exactly is the Heiken Aishi? So Heiken Aishi also spelled with an E sometimes. So it's sometimes spelled with Heiken. Ashi means the average bar in Japanese. So it literally means average. A lot of what I'm going to share with you guys in the front part of the webinar will be a bit confusing. It was confusing for me as well when I just learned this, but it's not important. More importantly, you need to know how to use the Heiken Aishi. Okay, so it's going to be confusing, but it's okay. It's more to like, it's good to know. The information I'm sharing is just more like good to know. Towards the end of the webinar, when we craft our strategy. That is the important part. That's the important part because then you will learn how to apply the Heiken Aishi. So the Heiken Aishi technique can be used in conjunction with candlestick charts when trading to spot market trends and predict future prices. So how Heiken Aishi is used, for me especially, I mean, I'm sure there are many ways to use it for different traders, but how I use it particularly is to spot trend. It is so crucial. You know how a lot of time price is going in an uptrend, it's going in a constant uptrend or going in a constant downtrend. For example, I can give you guys XAUUSD right now, gold. Gold has been going in a downtrend for the longest time. Okay, another one is EURUSD. The euro has been going down in a downtrend for the longest time, right? So the Heiken Aishi can actually help you spot that point of reversal and get in at the reversal. So as it's going down, it will make a reversal to make the recovery to go up. Using the Heiken Aishi, you'll be able to spot where to get in for the buy. Okay, sorry, I do see messages here. Let me try to figure this out. Okay, cool. Okay, so it's useful for making candlestick charts more readable and trends easier to analyze. For example, the trader can use Heiken Aishi charts to know when to stay in trades, when a trend persists, but get out when the trend pauses or reverses. Okay, so we're gonna look at examples for that later. Most profits are generated when the markets are trending. So predicting trends correctly is super necessary when you are using this technique. Okay, let's move on. So this is the normal candlestick pattern, and you can see this is the Heiken Aishi. I know it looks like when you look at the structure of it, it looks quite similar, as in you can see there's a low here, you can see price did a swing low here, you can see price did a swing high here. But if you look closely, the difference with the Heiken Aishi and the normal candlesticks is that the Heiken Aishi starts in the middle of the last candle. Do you see? So it's very confusing for people who only know the normal Japanese candlesticks. So normal Japanese candlesticks, you can see that, for example, the close was here, right? The close was here and the open is just next to it. There's rarely a gapping when it comes to Japanese candlesticks. But with Heiken Aishi, no matter where the close and start is for the normal candlesticks, with the Heiken Aishi, you can see that the start is usually in the middle of the last candle. Okay, it is more often not in the kind of like the center of the last candle. So it can be confusing for people who don't understand this candlestick, this type of candlestick or way to read the charts. Okay, so I'm going to explain a bit the textbook meaning for Heiken Aishi and a little bit of understanding. So the Heiken Aishi is the type of price chart that uses average to show the price movement of an asset. This chart used as a form of technical analysis to look at the asset's price movement with regards to overall trend. By being able to see the overall trend more clearly, you can make a better informed decision about whether to enter or exit a trade. Like regular candlesticks, the Heiken Aishi candle will display 4 different price level, which is the low, okay, the highest point, the opening, and the closing of the candle. But it will use data from a current and previous session to derive the values. That being said, the Heiken Aishi charts can be applied to the same time value as regular candlesticks charts, making them useful as part of a scalping, day, or position trading strategy. A lot of people also use it for swing trading, as can be seen in the below. In this comparison, the Heiken Aishi have a smoother appearance than regular candlesticks. Okay, it's smoother because it always just starts in the middle of the last candle or somewhere in the middle of the last candle. Okay. Okay, so what is the Heiken Aishi formula? Why does the candle start in the middle of the last candle? So the Heiken Aishi formula is a method used to calculate each candlesticks on the chart. Some of the formulas or calculations are more complicated than those used for a standard candlesticks. Here's simplified version, okay, of how to calculate the open, close, high, and low for Heiken Aishi candlesticks. So the open, which is here, the open of the candlesticks, it is the equivalent to the open of the previous bar. So you need to get the information from the previous candlesticks, okay, plus the close of the previous candlesticks, and you divide that information by 2. Okay, so okay, let's pretend this is the current candlesticks, this is the open. So you're getting the high and the low, the open and the close, and then you're going to divide that by 2. The answer of that will give you the open for the next candlestick. Okay, that's why the HA, the Heiken Ashi, always starts in the middle of the last candlesticks, or somewhere in the middle of the last candlesticks. Okay, because it is just like the average of the last candlesticks. Okay, so the close will be the open, the close, the high, and the low of the current candlesticks, and you divide that by 4. Okay, again, for those who are confused, don't worry, you don't really have to remember this. Whatever I'm sharing is more to like, it's just good to have, like, it's good to know, right? It's good to learn this information, but it's not like crucial when you are doing charting. Okay, so the high is the maximum value from the high and open or close of, hi Simone, I see more and more people joining, the current period, and the low is the minimum value from the low, open, and the close of the current period. So how do you read a Heiken Ashi candlesticks? When reading a HA candlesticks, you look at their wick, body, and color. Okay, so the color, it's either green or red. Okay, the wick, you need to know if the wick is on the top of the candlesticks or the bottom of the candlesticks. I know right now it just looks like both sides had a wick, but later on I'll show you more examples where the Heiken Ashi only wicks on one side. So it usually wicks on the upper part of the candlesticks or the lower part, and the other side that doesn't wick is usually flat. Okay. And the body. Okay, so the top of the upper wick is the highest value of the candle, and the bottom of the lower wick is the lowest value of the candle. The body is the difference between the session's open, close prices. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. Okay, everyone good? Everyone following? Is this too confusing? For those who are like a little confused, you don't have to worry. Like when we go to TradingView later, you see how there's actually so many different types of candlesticks patterns. This is just one of it. It's a very useful way to trade, but it's just one of it. Okay, so how to use the Heiken Ashi chart? There are a few ways to trade using the Heiken Ashi chart. First, understand each candlestick will tell you something about the price trend. For example, a long-bodied green Heiken Ashi candle with no lower wick. Okay, you can see that the wick is only on the top. There's no lower wick. Is considered indicative of a strong upwards trend. Do you see how this is so different from the traditional Japanese candlesticks? If this was the Japanese candlesticks, if you see a long wick on the top, you will immediately think, oh, there is a rejection. There's a rejection, that there is weakness. That's why the candlesticks is making this long wick. Okay, it is rejecting. There is a bearish rejection, and you might be thinking, oh, the bearish momentum may be strong. Okay, it is totally the opposite for the Heiken Ashi. The Heiken Ashi is when you see the wick on the top side rather than the bottom side, that is an indication of strong uptrend momentum. Okay, so it is opposite from your traditional Japanese candlesticks. Okay, and this is very important because this is what you use to identify trend when you are trading. Okay, so traders who have bought into the market might use these Heiken Ashi signals as indication to hold on their position in an attempt to maximize gain in an uptrend, because once you see this wicking on the upside, you will see, okay, you will think to yourself, okay, strong bullish momentum, right? Strong bullish momentum. So what you're gonna do is you're gonna see the next candlestick. If the next candlestick also shows another wicking on the upside, it just means, okay, continuation of that strong bullish trend. And then another one is just confirmation of another strong bullish trend. So the Heiken Ashi, again, like I said, is very, very useful in identifying trend. So you use it to continue playing the trend, or you use it to get out when you see a trend reversal. Okay? Everyone good for now? Okay, cool. I'm gonna show you the next example. Okay, so this is an example of how the Heiken Ashi would look like on the charts. Okay, so you will see wicking on the upside. The upside, this is confirmation of bullishness, confirmation of bullishness. So you keep holding your buy entry, right? You keep holding your buy trade. You hold your buy trade, you hold your buy trade, you hold your buy trade until this doji looking thing, or this spinning bottom, spinning top looking thing comes out. And then you see a wick at the bottom side of the candle. That is Heiken Aishi's first sign to you as a trader that, hey, the bullish momentum is weakening. Okay, the uptrend momentum is slowing, or there may be a possible reversal. Okay, and then you see the next candle, and the next candle, true enough, it turns red. Number one, it turns red. Number two, the wick appears on the bottom of the candle, signaling and confirming that yes, the bullish momentum has ended and now the bearish trend may have started. Okay, so this is exactly how you use the Heiken Ashi in terms of playing the trend. I really love the Heiken Ashi, honestly. It's very, very useful. Okay, so let's move on. Okay, so this is another example. You can see really strong downtrend, wicking on the bottom part, which is confirming the downtrend. Bearish momentum, bearish momentum, bearish momentum, bearish momentum, bearish momentum. All the way you can see all this bearish momentum. And suddenly this doji looking thing, or spinning bottom, I would say, candlesticks appear and you see a wick on the top side. Okay, this will suggest, this is the first suggestion. It's not confirmed, of course, it's not confirmed, but it's more like a suggestion from the Heiken Ashi that, okay, that downtrend may be ending, okay, and it is losing momentum, and there is a possible trend reversal. Okay, so the next candlestick comes out, you see the wicking on the bottom side, you're like, no, maybe it was a false alarm, right? And then you see another candlestick, same doji comes out, which gives you another signal. If I was the trader looking at this trend and I see this, I would definitely get out here. This second one was my second warning to tell me that there's a trend reversal. So I will get out and I'll just take my profit, right? There's no point of risking. Okay, so let's move on to the next example. Okay, this is not example. Okay, so to sum up what we've learned with the Heiken Ashi, the Heiken Ashi chart is a type of price chart that uses daily average to show the median price movement of an asset. Secondly, the regular candlestick display 4 different price levels of an asset in a specific period, but the Heiken Ashi candlesticks use data from the current and previous session to derive their values. The Heiken Ashi charts can be useful as part of a scalping, day, or position trading strategy. And when reading the Heiken Ashi candlesticks, the high is the highest value of the candle and the low is the lowest value of the candle. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. So the long-bodied green Heiken Ashi candle with no lower wick is considered indicative of a strong bullish trend, and a long body red Heiken Aishi candle with no upper wick is considered indicative of a strong bearish trend. So because the Heiken Aishi candlesticks show the directional market trend, it can be useful to apply trend indicators, which I will show you later how we can apply trend indicators in order to identify the strength of market momentum. Okay. Okay, we're gonna create a strategy. We're gonna move on to TradingView to create a strategy. If you guys have any questions, do ask in the chat box. Don't be shy. The whole point of these webinars, the whole point IronFX created these webinars is to help you guys grow your account. Okay, so if you have any questions, go ahead, just shoot. Okay, so let me just pull out what I wanted to show you guys. Okay, so for those, right, who don't already have an account with us, you can head over to vip.ironfx.com/app. Okay, if you don't already have an account, just go to register now. You can create an account as long as you have an account with IronFX. You need a minimum deposit of $250 and you will be able to create this VIP IronFX account. So let's log in. Okay, so what is the benefits of having this VIP room access for IronFX? If you're a bronze, you get to create an account, which is a minimum deposit of $250, $1,000 or $2,000. You get an account. Silver is $1,000 and gold is $2,000. Okay, so what is good about this is that every day we will update this chart. So you can see here, we will update this chart's we'll update the fundamental news. So we'll update, for example, Euro news. So we'll say like the Euro USD rose noticeably higher to finish the trading week. We'll just update on like every day. The last time we updated was Monday. Okay. Then we've got GBP, we've got USD, JPY. Can we obtain the indicators? How can we obtain indicators? I will show you how to use indicators in a bit. We'll be going to TradingView in a bit. Let me just show you the IronFX VIP group. Okay, so on top of that, we also have all these major pairs, commodities, indices, cryptocurrency, forex pairs. Okay, if you just click into any of them, you will see that we do update regularly. We will show you guys like, hey, price is still testing the key support level at blah, blah, blah. So we'll update information about any particular chart. And if you are new here, the good thing about this is because we have so many traders, right? We have a lot of traders on this platform. So you can just like ask one of our pro trader, for example. Let me show you guys. For example, you can ask trend line. Okay, you can draw a trend line. And then you can ask one of us, hey, Desmond, or maybe, hey, Cass, sorry, hey, chief trader, or whoever it is who sees your message, is this a valid trend line? Okay. And then now you can highlight the trend line. You can highlight the trend line, link object text, and click on this trend line. Click confirm, press enter, you send it. So whoever that was tagged, you can tag Desmond, you can tag me, and you say, is this a valid trend line? Whenever I come back, so even if this chart was deleted, if I hover my mouse over the trend line is going to appear, okay, so that I can assist you. So then when the chief trader sees this, the chief trader will reply to you, hey, so-and-so, this is not a valid trend line because a valid trend line requires 3 touches. But in this case, this trend line only has 2 touches and therefore it is not a valid trend line. Okay, so You can get all the help you need just by creating an account on the VIP, the IronFX VIP room. It is free as long as you have an account with IronFX, and as long as you have a small deposit of $250. Okay, cool. Okay, on top of that, the other thing I want to show you guys is that for those who are new here and needs help with trading, especially the basics, please head over to our YouTube page. Okay, just type IronFX on YouTube. We have a lot of videos where we teach you guys like the basics, like it even comes in like different languages. Okay, so we'll teach you things like moving average, for example, or Heiken Aishi for today, the total trading strategy. Okay, so there's a few different things going on. You can just come and explore. It will help your trading a lot. Trust me, I was once a new trader as well, and I wish I had this kind of resources. Back then, I didn't know where to find this kind of resources. I didn't even think to come on YouTube. Instead, I went on to those really, really expensive courses where I need to pay like thousands and thousands of dollars to learn like really simple things like moving average, for example. Okay, so do head to our YouTube. We have a lot of information there. It's completely free. It will help your trading a lot. Okay, so next, let's move on to trading view, where I show you guys how we can use the Heiken Aishi. Let's choose gold, for example. Okay, let's use gold, for example. We're gonna go, because today's topic is Heiken Aishi, so we're not going to be using your normal candlesticks pattern, okay? We are going here, candles, click on candles, click on Heiken Aishi. So there's different kinds of candles that you can use. This candle is the traditional Japanese candlesticks. We've got bars, okay? We've got the line chart, we've got line chart, we got baseline, we've got high and lows, line breakouts, Kaji, but today's topic is Heiken Aishi, so I will show you guys how to use Heiken Aishi. Okay, so click on Heiken Aishi. It looks similarly to the traditional Japanese candlesticks, but again, it's different. How? Because it starts in the middle of the last candle, and we already know why that is. It's because you take the high and low of the last candle and you divide it by 2, and that will be your opening for your next candle. Therefore, it's always going to be somewhere in the middle. Okay? Everyone following? Do I need to repeat myself? Everyone good for now? Okay, thank you, Joesh. Okay, so let's zoom in because this is really important. The way that you use Heiken Aishi on its own, I will never recommend using a candlestick pattern or a candlestick on its own. Never, ever. You always have to combine it with other things, okay? Always combine it with trend, support and resistance, Fibonacci levels. Please share screen, thank you. Oh, do you guys not see it? Okay, can you see it now? Thank you, Christine. I'm sorry, I didn't know how long I was talking to myself for. Do you guys see the screen? I thought when I switch screen, it will automatically share. I didn't realize I have to keep sharing screen. Sorry about that. Okay, thank you so much. Thanks, Christine. Okay, so I'm gonna start all over again. So to get the Heiken Aishi, go to this area here. It will say, let me just go back to your normal. Okay, it will say, go to any particular chart. It will say candles, and then you get to choose your different kind of candlesticks that you want to look at. So we've got the bars, candles, hollow. Candles is your traditional Japanese candles, right? We've got the baseline, the line chart, Renko, line break, Kaji, these are all the different kinds, but because of today's topic, we will be looking at the Heiken Aishi, okay? For today's topic, we will be looking at the Heiken Aishi. Again, it looks like your traditional Japanese pattern, but the only difference is that it starts in the middle. The opening is always somewhere in the middle of the chart. Why? We have already established it's because you take the high and the low of the last candle, you divide it by 2, and you will get the opening for the next candle. Okay, therefore it will always start in the middle, somewhere in the middle of the last candle. Okay. Okay, so just to test you guys a little to see if you guys were following earlier on, I just want to check if you guys remember if the wick of the Heiken Ashi candle is on the top part of the candle, does that signify bullish or bearish momentum? Can you guys let me know in the chat box so I know if you guys are still following, if I need to repeat anything? If you see the wick of the candle on a Heiken Aishi candle on the top part of the candle and the bottom part has no wick, does that signify a bullish or a bearish trend? Thank you, Christine. Thank you, Joash. Okay, thank you. At least you guys were following. This is really important. Okay, so I'll give you an example of how to use the Heiken Aishi. But of course, whenever we are looking for a setup in trading, we never ever just use one thing to look for our entry, our stop loss, and our buy. We always combine it with other things, of course. Always combining with other things. Okay, so if let's say I was already in this buy here, I would see this long wick here. I would think it's a bullish momentum, bullish momentum, bullish momentum, bullish momentum, bullish momentum. I will hold on to this trade until it gets to this doji looking candle, this doji candle, and that's where I get out. Okay, so that's just an overview of how you use the Heiken Aishi on your own one rough way. Now I'm going to show you guys how I use it with my other strategy. Okay, by combining other strategies. Okay, so let's go to the day chart. This is exactly how on a normal day I use to look for a setup. Okay, so as of today is the 16th of November. I am currently 4% in profit in my own trading account. Okay, I'm 4% in profit, and whatever I'm going to show you guys is exactly how I got my 4% in profit. Okay, this is exactly how I would find a trade when I'm trading on a daily basis. Okay, so first of all, I will look for trend. Trend is very important. I feel like looking for trend and identifying trend, you already win half the battle. Why? Because if you identify that it is a downtrend, it means that you are biased to get in for a sell. Okay, if you identify that it is an uptrend, you are immediately biased to get in for a buy. Okay, so you first need to identify trend, and you need to identify it on a bigger time frame so that when you go down to a smaller time frame, you can narrow down and fine tune where you think your entry is going to be. So how do you identify trends? Simple. The first things first, use a trend line, use a channel, or you can look for higher highs, lower lows, lower highs, higher highs, and higher lows. Okay, so in this case, a price was moving on a downtrend for the longest time. Okay, so I'm just going to use this trend line to identify the downtrend. And the fact that it's on a lower, it was making lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. It's confirmation of that downtrend that we are talking about. Okay, so one thing that I've noticed is that this downtrend has recently been broken by the recent candle structure. Okay, the recent movement in price. So the thing about not using Heiken Aishi or using candlestick pattern is that usually the traditional way of TA or the different way of TA is that traders, okay, so this is a swing high here. When price breaks this trend line and it breaks this swing high here, that is only when the trader confirms, that the uptrend has started and the downtrend has ended. Okay, the problem with this technique is that from here all the way to here, you have lost so many points. Okay, you have lost so many pips. Your entry would have been so late. But if you were to use the Heiken Aishi, right? You use the Heiken Aishi. So the Heiken Aishi, remember, if the wick is at the bottom and the candle is red, it is a sign for bearish momentum. If it's green and the top part, the wick is on the top, it is sign for bullish momentum. Okay, so one thing that the Heiken Aishi would have already told you is that here, in this candle here, is already the possible trend reversal. Okay, why? Because the candle before it, there was wicks on both sides. Whenever there is wicks on both sides, when it comes to the Heiken Aishi, this is the first sign of trend reversal. Okay, this is the first sign of trend reversal. And then how do you confirm that trend reversal? The trend reversal is that the wick is on the top part. So you would have gotten in here for a buy based on Heiken Aishi's confirmation. You got in for a buy, the wick is still on top, the wick is still on top, the wick is still on top. Until today, the wick is still on top. So from somewhere around 1666, okay, 1670, for example, you would have already been able to identify the possible trend reversal. You would have already been in this buy trade, and right now you are still in profit for that buy, and you are still not taking profit yet because Heiken Aishi has not told you to come out from that trade yet. Okay, so that is the beauty of Heiken Aishi. Heiken Aishi is that thing that is able to help you identify trend reversal before all the other things like the break of the swing high, the break of another swing high, okay, all these other things. Okay, so let's combine Heiken Aishi with all the other things. Okay, so how I would have gotten into this trade is that I would have, of course, already identified this trend line. First, I identified this trend line. Sorry, I wouldn't even use a trend line. I would actually use a channel because a channel would be valid in this case, right? That's a really beautiful channel. The break of the channel is my first sign of trend reversal. Okay, this break of the channel is my first sign of trend reversal. But when it just breaks, I'm not confirmed, right? It's not confirmed. So what I want to do is look for more confirmations because a lot of times it could have just been a fake out. It could be a fake out break and it just comes back into the channel again. Okay, in this case, it wasn't. Okay, so the first confirmation was Heiken Aishi showing wicks on both sides. Second is that the wicks start appearing on the top side of the candle. So channel is showing bullish momentum, a trend reversal because of the break of channel. Number two, Heiken Aishi is confirming that. Okay, let's see what else. Number three, the break of this swing high is further confirming. If price continues to go higher, if it breaks this swing high here, that is even further confirmation that price is definitely reversing, doing a recovery, and gold is on its way up. Okay, so we're going to wait for price to break this 1798 area. This is a very crucial area. If it breaks here, this is going to be our entry for the buy. Okay, guys, just take note this for future reference. It's not going to be today because I don't think it's going to break today. It doesn't look like it's going to break today. Maybe next week. Okay, this is a very important area. Okay, so after I have identified trend, I'm going to highlight some support and resistance. Let me highlight some support and resistance. Why is support and resistance so important in trading? Support and resistance is your entry, stop loss, and take profit. Okay, support and resistance will be used as your entry, stop loss, and take profit. It is so crucial to be able to identify support and resistance when you are charting. If you cannot master support and resistance, I would think that you are losing a lot. Okay, there's probably other ways to trade, but from my trading experience, I find that identifying support resistance will win you a lot of the battle. Okay, we've got that. Let's go down to the smaller time frame. Now what we're going to do is combine. Okay, we're going to combine give me a sec. Okay, before I continue, I want to let you guys know that before this webinar started, I actually placed an order, right? I actually placed an order for a sell at 1785. Okay, why? Because there is a strong resistance here. Okay, so for those who want to consider that sell, I'll let you know in a while why I got into that sell, but I'm letting you know that it's in that area of that sell right now. Okay. Okay, cool. Going back to the Heiken Aishi. Once I have identified that, I've identified trend. I'm right now currently very, very biased on getting in on a buy. Because why? Because momentum is showing me that it's a buy. The break of the channel is showing me that it's a buy. The break of the swing high is showing me it's a buy. Heiken Aishi is currently showing me it's a buy. So right now, the problem about wanting to get in the buy is that price is already on its way up. So what do we do? The good thing about trading is that price never moves in one direction. Okay, it never ever, it is so rare that price moves in one direction. It doesn't, never forever. So right now it's going up. What is it going to do? More likely or not, it's going to reach a point where it wants to do a reversal, a little pullback. It does a pullback, and that's where your Elliott wave comes in. That's a topic for a different day. Okay, your Elliott wave comes in, and here at the pullback, you get in for your buy. Okay, you get in for your buy here at the pullback. Okay, so where do I think the pullback will be? I think it's at 1720. I will show you guys how I get that number. Okay, so one thing I like about the Heiken Aishi right now is that it is showing reversal signal. Okay, do you see 1, 2, 3, 4, 5, 6? 1, 2, 3, 4, 5. Sorry, 5 candles have shown wicks on both sides of the candle. So again, remember, wicks on both sides of the candle is your first signal from Heiken Aishi that a reversal might be happening. So this area here, okay, Heiken Aishi might be saying, okay, that's enough. It's time for me to reverse now. And the pullback might be happening soon. Okay, so this is where the pullback might be happening. I'm a bit biased to get in for a sell right now. Okay, we're gonna get into a sell, but my overall trend is a buy. And how do I get my take profit? I go back to the normal candlesticks and I find the swing low, the closest swing low. That's gonna be my first take profit. Okay, this is going to be my second take profit if price even gets here, right? If price even gets here, that's great. But if it doesn't, that's my first take profit. This is my second take profit. And either from here, price is going to reverse and continue on its uptrend, or it's going to go down lower and it's going to continue on its uptrend. Okay, whatever it is, because we are just day traders, I'm only going to kind of forecast or kind of want to see where price is going from here to here. Okay, so let's go back to the Heiken Aishi. The day chart. So Heiken Aishi is agreeing with this analysis. Why? Because again, you can see Heiken Aishi is already signaling reversal. Okay, that's one. Number two, it's because if you go back to the normal candlesticks, you can see price tried to come here a few times and it was having a hard time breaking. I don't know if it's gonna break this time, but if it does, then this cell entry is gone. But based on the Heiken Aishi, so far it looks good. It makes me want to believe that there's a possibility that's going to reverse from here. Okay, other thing that I am doing that is supporting this analysis is combining this with Fibonacci levels. Okay, so whenever you do an analysis, 1.389, sorry. Okay, so the 1.45 fits nicely there. Although 1.45 is not a level that usually price reverse on, it is still a level to consider. Let me see what else I can combine there. So what I'm trying to show you is that how to find a setup is to combine different technical analysis, which I will not be able to teach you guys in one webinar today. You have to come back if you want to learn the rest of it. You're going to combine all of this together. And then the area with the highest confluence, okay, is the area you get in for your entry. Your take profit is where the last swing high and swing low is, and your stop loss will just be above that area you think price is going to reverse. Okay, so right now I'm biased that price is going to go down. I will show you guys in a while why I think that. Okay, no, Ichimoku is not agreeing. Stochastics. Okay, we can use stochastics. Stochastics is kind of agreeing. Okay. Okay, guys, I'm gonna run through again why I think it's a sell. Okay, so number one, overall, I think gold is a buy. Okay, overall, I think gold is an uptrend. Why? Because of the break of the channel and the break of the swing highs, the swing highs here and the break of things. But the thing about any chart is that it never goes in one direction. Before it keeps going up, it needs to pull back once in a while. Okay, so I am expecting a pullback. Why? Because a pullback meaning we're going to get in for a sell. Because number one, for our topic for today, Heiken Aishi is showing that there might be a trend reversal. How is it showing that? Again, I said because when they are wicking on both sides, that is Heiken Aishi's first sign to you as a trader that there may be, I'm expecting a pullback as well. Okay, nice, Musa. There may be a possible trend reversal. Okay, so Heiken Aishi is already signaling to us, yes, there might be a trend reversal in this exact area that we're looking at right now because of the 1, 2, 3, 4, 5, 6 candlesticks that looks like a doji or looks like a spinning bottom. Okay, number two, why do I think that it's going to be a pullback? There is a Fibonacci level here. Okay, so I don't usually take you guys for these webinars. Okay, so you probably would have never heard me give you this analogy. Okay, so this is a very important analogy. I use it every time when I'm trading. I think about it very often. Okay, so pretend this is you. Okay, this is a really badly drawn statement. You're going in the direction, you're going in the right direction. Okay, you're going right, you're walking to the right, you reach a door. The question is, if you can push the door, you can go into the next room. If the door is too heavy, if the door is made out of titanium, if there's a lot of rocks, there's a lot of boxes, there's a lot of obstacles behind the door will be, or if the door is locked, the door will be too heavy and you will have no choice but to reverse. Okay, but to reverse. Okay, so this represents price. The man represents price. The direction represents up or down, whether you're buying or selling, and the door represents support and resistance. Okay, so price right now is at our door, which is the resistance. And I do identify that there is some form of resistance at this door. Okay, why? Because number one, there's a 145 Fibonacci extension here. Although 145 is not a typical level that we look at, okay, it is also still something we should be considering. Okay, so I'll give you an example. Let's say in real life, you reach a door, you're trying to open the door, and you're wondering, oh, how come I can't open the door? Turns out on the other side of the door, there is a tiny lock. Have you seen those really tiny lock, those toy locks that you can break open with your hand? Okay, so this 145 Fibonacci extension represents that really weak, fragile lock. Although it's not a very strong Fibonacci level, I'm still going to leave it there just to say that there is some form of resistance. So that being said, I do think price is at an area, is at a door, and price is trying to push this door open. If price is able to do that, then it's going to break and price is going to go higher. But if price is not able to break this door, it has no choice but to reverse, right? Okay. Why do I think it's going to reverse? The resistance that are showing right now is the candlesticks showing that reversal pattern. Number two, the Fibonacci level. Number three, there was something else. There is a little form of support and resistance in this area. Okay, it's not the best horizontal support and resistance, but there is some kind of support and resistance here. Okay, because we can see that price came here a few times. Every time it came to this area, it came here, it reversed. It came here, it reversed. In this area, I didn't respect. It came here, reversed. So now it's back in this area. Is it going to reverse or not? We don't know, but so far the chances of reversing is it's there, but it's not the best. Okay, so the next reason why I think price is going to reverse there is because on the stochastics, we are seeing that price is reaching a resistance. So how we use stochastics is we identify support and resistance. It is now at a resistance. We expect it to reverse at a resistance. Okay, that's as simple as that. When I look at this setup, how confident am I that this setup is going to work out? I'll be very honest, I don't think this is a very strong door. I think there is some kind of resistance in this door, but if this person here is strong, that means if this bullish momentum is strong, it will not have a problem breaking this door here. They will not have a problem breaking this resistance, and it's going to go higher. Okay, but that being said, the Tenkan Aishi is already showing weakness in the momentum. Okay, it's showing that this person that is pushing the door is maybe tired. Maybe he already pushed a lot of doors. Look, he already broke this channel. He already broke this swing high. Maybe he's tired. So by the time he gets to this area, he needs a little break, and he might just reverse to this area, and then from here he'll try again once he's fully rested, right? But this current point of time, we are seeing weakness in that bullish momentum. Again, take note that my overall bias is that price is going up. Price is bullish. It's just that at this current point of time right now, there is some form of weakness. So you can consider getting in here for a sell. I personally have a pending order ready at 1784. Okay, because I think the bullish momentum right now has weakened, and I don't think it can break. I may be wrong. If I'm wrong, then I'll just hit my stop loss. That's totally fine. I'll just move on to my next trade. So the thing about trading is there's nothing to do with like a feeling. There's nothing to do with, oh, I feel like price is going to go up or down. You just collect whatever information, technical analysis or the charts is showing you, and then you make a decision. So based on all the decision that I've collected, I am a little biased that the bullish momentum has weakened, and there's a possibility of a short pullback, a very short pullback. Okay, a short pullback means that if you get in here for a sell, don't expect it to go back down to 1,500. Okay, a short pullback means a very short and small move. It's just enough for you to make some profit, and then move on to your next trade. Okay, so let's say this trade were to work out. We are looking at a let me see what's the risk to reward. Because our stop loss is so tight, our risk to reward will be somewhere about 1 to 2. Okay, 1 to 2. That means if you have $100,000 account, you're risking $1,000 to make $2,000. So if price really goes to our stop loss today, we'll be losing $1,000. But if it goes to our take profit, we'll be making $2,000. Okay, so these are the kind of trades that you will be able to get. Honestly, if I have to rate my confidence level in this, I would say it's only a 60%. Why? Because usually I don't like taking trades that are going against trend. So right now the trend is definitely bullish, right? We are very biased that price is bullish. Okay, we are biased that price is bullish for sure. So going in for a sell is like going against the wave. So if you are taking this trade, please be super cautious. I do have a pending order here, but my lot size is smaller than what I would usually risk. Okay, usually I will risk 1% per trade, but because this trade is going against trend, my risk becomes 0.5%. So let's say I have a $100,000 account, I'm risking $500 to make $1,000. Okay, and that's exactly how you would be able to find a trade using the Heiken Aishi, which is right here, combining it with indicators, Fibonacci levels, combining it with trend, combining it with other things. Okay, I hope to see you guys tomorrow. I will be taking you guys for the live trading analysis session. The live trading analysis session, I won't be using Heiken Aishi. I'll be using the strategy that I normally use. I do use Heiken Aishi once in a while, okay, but then I usually on a daily basis, I just use the traditional Japanese candlesticks. Okay, look, the traditional Japanese candlesticks is showing bullishness. Okay, but Tenkan Aishi was showing bearishness. Okay, so I will see you guys tomorrow. If you guys are joining, hopefully we get to find some trades tomorrow. Hopefully we get to make some shopping money tomorrow. I'll see you guys tomorrow. Bye guys. Thanks for joining. Bye.